You were involved in one of the largest M&A transactions in this calendar year, if I will, and probably the largest M&A transaction in cement history, so to say. Tell us a bit about it, whatever you can. I mean, in the sense, why do you reckon such a transaction happened? And maybe some of those details are well known, but still, if you would care to maybe mention it. And what does this do to M&A appetite in the country in cement? And whether there exists a set of candidates and buyers on either side for these transactions to even happen?
I think if you were to look at all the press release and media interactions from the Holcim CEO that he made, he has himself said that it has been a bitter and sweet both, because one, they were able to exit at such scale in such a short period of time. But on the other hand, they have been an investor in India for a very long time. So the heritage for both the cement companies that they have owned and controlled goes into several decades. So it's not an easy decision for them to look at what they want to do. But I think the way they looked at it is about prioritization. Where do they want to deploy their capital? Some of the messaging that they were getting from the shareholders, all of those were factors which were important for them, basis which they thought that it is a better decision for them to exit. Because the key challenge for any foreign investor is that the growth dimension for India is huge. So these businesses are still going to give double-digit growth for a very long period of time, just given where some of the consumption stats in the country are. What it means is that all the cash flow that the existing operations are generating, or a reasonable portion of the cash flow, will have to be reinvested for growth, which is okay, because a number of Indian companies are absolutely clear that they want to continue reinvesting that cash flow while maintaining sustainable credit metrics. If, on the other hand, the shareholders' expectations are higher dividend, higher return of capital, then you cannot balance the two. So when you look at this investment decision from a European shareholders' perspective lens, they value yield and free cash flow being returned to shareholders a lot more than necessarily using that cash flow to be invested in growth. So that, I think, explains the rationale as to why ultimately it is a strategic and shareholder messaging driven decision basis which they chose to consider an exit. But I think what is more interesting is if you look at the people who evaluated making a potential investment in this company, most of the people were Indian strategics. So which just, in a way, it is good that there is enormous confidence amongst number of other Indian groups and corporate houses to make such or consider and make such large investments in a core segment, because they are equally bullish about the growth prospects and what they can achieve with such a platform. Because I think whenever you're looking at business of this scale, whatever they make in terms of EBITDA in India, that business at scale has been built over decades. You just can't replicate it. Even if you have an aspiration to enter into a particular well built out sector, you cannot replicate something like that in 2, 3, 5 years. It will take decades to do it. So when you have such a platform, the motivation for them to look at it seriously and therefore make a bid for it is actually a big positive. Because one of the key questions is how are Indian companies thinking about investing in India, and whether they are indeed interested in investing in greenfield, brownfield, operating assets. This clearly proves that for a well-run business, there is great appetite amongst large Indian groups to look at making investments in India.